Energy stocks underperforming the broader market in today's session, though it does remain one of the year's best performing sectors. We're looking at how to navigate the big picture with the Yahoo Finance playbook. To discuss, we're joined by Stewart Glickman, Synergy Equity Analyst and Deputy Research Director at CFRA Energy Analyst, alongside Sarah Hunt, Chief Market Strategist and Portfolio Manager at Alpine, Saxon Woods. Stewart, we're going to start with you here and just kind of get straight to what might be some of the winners as we look at an energy sector that's already had a pretty decent run this year.
Right, Julie. So thanks for having me. So I think if you're going to think about where to play energy, you have to start first and foremost with what is your outlook for crude oil prices, because 7 out of every 10 barrels of oil equivalent are coming from the liquid side of the ledger. And crude last year averaged $78 a barrel. That's for West Texas Intermediate, the U.S. benchmark. We think this year, probably somewhere in the neighborhood of 80 to 90 will be the average for the year. And in that kind of environment, I think you want to be positioned with upstream, the folks that benefit directly from the price of the barrel of oil when they sell it. Start with the biggest name in the business, Exxon Mobil. We have a 4 stars or buy opinion on Exxon. They have relatively stronger exposure to crude oil than their chief rival, Chevron. A lot of growth potential coming out of Exxon in the next couple of years, particularly from Guyana. Awful lot of growth potential offshore there. So we like Exxon. Their balance sheet is in incredible shape. Plus, you're going to get, the dividend. Plus, you're going to get benefit from buybacks.
Sarah, same question to you. We're talking about the energy sector, big sector, obviously, a lot of subsectors there, verticals to think about, but kind of big. Give me your 30,000-foot view, Sarah. Looking ahead here, bullish on the sector generally?
Bullish on the sector generally. I would say that one of the issues has been you're coming out of the pandemic. Demand just dropped off the face of a cliff. Supply stayed pretty okay. We're starting to see some of those dynamics change, and I think you're starting to absorb a lot of that supply. So I think from a longer term perspective, we like it. We think there's a much longer tail on hydrocarbons than people expect there to be, even though there is an energy transition underway.
And the big guys are getting bigger, Sarah, in many cases, right? We've seen acquisitions happening, Exxon Pioneer, Chevron trying to acquire Hess. We'll see how that ends up working out. Is there going to be strength in size when it comes to E&P?
I think there's absolutely strength in size. You've also seen consolidation on the service sector. So when your suppliers are consolidating and you consolidate, then you can meet each other in a more equal way. But there's been an enormous amount of consolidation in the energy patch. I've been around for quite a while in that group, and the number of companies left is a lot smaller than it was if you looked at it 5 or 10 years ago.
And Stewart, kind of similar theme I want to get your take on. Obviously we talk about the energy sector here, a lot of M&A, Stewart. I'm interested whether you see that activity continuing, and if so, any potential takeout targets in your coverage universe, Stewart?
Right, Josh. So you're right. M&A has been really prolific this year. The common theme to a lot of the mergers, but not all of them, has been exposure to the Permian Basin. And where you're seeing in particular is companies that are buying up acreage that's adjacent to their own. Exxon and Pioneer, for example, that's a fair piece of, I think, the value of why Exxon went after Pioneer. When you buy up the adjacent acreage, now you can run longer laterals and reduce your unit costs when you're doing that unconventional shale development like Exxon does. I do think this is likely to persist. And I think Sarah's point that, the recovery on the demand side is really, I think, in full swing. And this industry has really kind of underinvested in new supply for the better part of the last 7 or 8 years. And that's going to come home to roost. We're just simply not going to have enough supply probably through the end of this decade. And I think that keeps prices elevated.
And Sarah, I want to touch on the other big theme here. You mentioned hydrocarbons have a longer tail than people thought. But most of these companies are also investing in, sort of carbon capture technologies, looking towards a post-hydrocarbon or a less hydrocarbon world. Is that, though, when you're investing in these companies, is that part of your thesis? Is that something you're looking for, or are you still focusing on what's happening now?
I would say that it has to be an and, because there is going to be a transition. And so you want the companies that are taking it seriously and spending money doing it. You don't want them indiscriminately throwing money away, but you want to look at companies who are trying to figure out how to position themselves and or how to make things cleaner, faster, better than they were, because that's obviously an issue for the entire industry. So it's definitely a piece of that. And then you look at some of the transition fuels like LNG, and you look at some of the companies that play into that area as well. I think you're going to see that's going to become important, even more important as well, as that really starts to become globalized. It's still a bit landlocked in different places.
And we got Stewart to talk about some of his names. What are some of your preferred names in the industry?
Well, we like some of the service names too. So Tidewater, there's been a huge consolidation in the boats that service all of the offshore oil rigs and all of the general offshore production. We also like Schlumberger, and we like ConocoPhillips, and even though Exxon has done better than Chevron, we like Chevron as well.
Do you think that the Hess deal will get done?
It's always a question with M&A, and I think it's a big question right now with the FTC, because they keep asking for more information, even in areas where that didn't used to be so much of an issue. So they're very confident. Hess is confident. Chevron's confident. Can anything happen? Absolutely. So you don't want to absolutely count on that for the only thing that's going on. But I think that it's just a very different industry than you used to have. Return on invested capital is important. Dividends are important. They don't stretch their balance sheets the way they used to. It's a much different industry.
All right, thanks to you both so much. Really interesting stuff. Sarah and Stewart, thank you both for joining us.